What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, as we get older in life, things change. Investing strategies, where we want to live, what we want in life, what our goals are in life, our investing strategies, and kind of like stability. We don't like chaos. And I don't, if you like chaos, that's fine. I like just chilling, doing my thing, leaving things alone. It is what it is. And these five dividend stocks are excellent for dividend increases. People can live off dividends and treat it as a retirement pension. And some of these might be in your portfolio. And I have a bonus stock included. You guys mentioned this one. I really like it. I'm going to go into detail with this dividend stock. It's very attractive. So if you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. You got to hit that notification bell because I'm going to be posting videos here and there, sporadic. I'm just about done with my semester for next week, and it's coming to an end, and it's going to be very, very intense for the next 7 months. So I'm pretty much social life is going to disappear, and it's time to really go into gut check and get this final push before I start my rotations. So I don't want to screw things up at all. I mean, I set the tone very well with my GPA, just like your dividend portfolio, your Roth or traditional IRA. You set it, forget it. You set the tone early, and it's not as stressful in the long run. So my GPA is pretty good. I can manage to get a B minus here and there in the class. That's not the goal, but setting the tone makes life easier. It does, and you know that as well, especially in projects and everything. If you were in school or wherever at work, you set the tone early, and life is good. Just like these five dividend stocks. So let's check these out right now. That first stock is Target Corporation. It's sitting at $247.58. Dividend yield of 1.46%. It has destroyed the S&P in the past 5 years. Big company. People are very busy shopping over there. And look at this. This is traditional and Roth IRA material. It's increasing its price per share. I will show you it has increased its dividend over time, has a decent PE ratio, 18.21. But man, it is growing fast. So this is a really good fractional share dividend portfolio on M1 Finance. Again, this is not financial advice for entertainment purposes only. Disclaimer in the description. But my gosh, you can use my affiliate link in M1 Finance. And, if you want a traditional Roth IRA, you get $50 right away if you sign up. And you can put money in Target. So I'm just letting you know I have my affiliate link at the bottom. But these guys are fantastic. Powerful juggernaut stock, man. Dividend increases. Now the yield may be low, but that's because its price per share is blowing up like crazy. What a great company. And I'm going to show you their dividend history. Look at this in 2013, 43 cents, 52 cents, 56, 60, 62, 66, almost at $1. And it has a dividend yield of 1.5% with a PE ratio of 18.06. Annual dividend of, it appears to be $3.60. So it has very consistent dividend increases. That was a very aggressive dividend increase from 68 cents to 90. And I see this increasing. It's a very good stock that will increase its dividend. It'll increase its price per share. It makes it very attractive as a dividend stock and a traditional and or Roth IRA material. An excellent day trading material too. So people that do covered calls, I know a lot of people that do cover calls with Target for a reason. I mean, they're just a phenomenal stock and a phenomenal company. So it makes perfect sense. Let's jump to the next dividend stock. So one of you guys mentioned Costco, and I do think this is a very good dividend stock. Definitely a really good dividend growth stock. I mean, look at this. It's at $530. There's a huge opportunity to probably stock split. And these guys have a dividend yield of 0.60% because the price is going way up. I mean, that would be amazing if it was $530 sitting at $530 and it had a 5% dividend yield, but that's not true. And definitely excellent traditional and Roth IRA material. It has a year range of 307 to 560.78. That is excellent growth. This is a phenomenal dividend growth stock, and I'll show you why. Look at this in 2004. You got 10 cents, then you got 11, then 13, then 14, 16, 20, then 24, then 27. Then you have a special dividend. That's pretty nice, $7, 2012. 31, 35, 44, 45 special dividend. That's pretty nice. 50 cents, 57, 65 special dividend 20. Very nice. 70 cents and to 79 cents. So this is pretty expensive, but you are getting a dividend increase, a consistent dividend increase. The one thing that kind of turns me off is the dividend yield of 0.6%. PE ratio is 46.63. Phenomenal company. It's still a very good dividend growth stock. Excellent traditional and IRA material. Increasing its net asset value, beating the S&P, and it's increasing its dividend. That is the trifecta for a excellent traditional or Roth IRA stock, and it's an excellent day trading stock as well. I mean, look at its price. I mean, you can, people, I know for a fact people have bought the dip in this one, and this is a really good covered call stock as well with options. So there have been some people I've read on Twitter that have made very good money with covered call options with Costco. Let's jump to the next dividend stock. That next stock is Realty Income. So I am long in these guys. I own 100 plus shares of these guys. It has a dividend yield of 4.39%. They have over 6,000 properties that they are a landlord to, and they're well diversified. And these guys are pretty much pandemic proof and recession proof. And the real estate sector has took a huge hit during the pandemic, and it's going to take a slow recovery. So this one is down, and I cannot wait for more shares to be bought with dividend reinvestment, which makes me very excited with Realty Income. Traditional Roth IRA material, sure, but I like Realty Income for the dividends, and their dividend increases are phenomenal. One of the best, I would probably say it's the best monthly dividend stock at the moment. I have mentioned Agree Realty Corporation as a stock that is catching up to them in a monthly dividend stock, and they're a lot smaller and they have the same type of portfolio. So keep an eye out on those guys. The symbol is ADC. So let's jump to the next dividend stock, but I will show you the dividend history on Realty Income real quick. I'll just start with 2018. They're sitting at 22 cents and slowly 23 cents. They're going to be close to, they're right at the 24-cent mark right now. They have increased their dividend numerous times. They have a reputation of increasing their dividend. Their compounded annual growth rate, a little bit slower, but their dividend growth rate, not bad, but you're going to get a consistent increase. So I like raises at work. Who says no to that? Has a dividend yield of 4.48%. P ratio is 53.59. Ooh, annualized dividend of $2.90. And again, I have 100 plus shares in these guys, and I'm just reinvesting. And you know what? With these guys going, with the price per share being down, people are capitalizing on the dip. This is a beautiful monthly dividend stock that people like. Again, is it traditional Roth IRA material? I do know people that have them in their Roth IRA, but for me, I'd rather just collect the Benjamins and the dividends and or reinvest with a monthly dividend stock like this. These guys are really powerful. Let's jump to the next dividend stock. Next stock is Johnson and Johnson. It's sitting at 158.89. So they just made an announcement. They kind of like split off some of their medical stuff. But I'm going to tell you guys, with their over-the-counter products, it is unbelievable, especially Tylenol. Tylenol is one of their biggest sellers, and people try to avoid non-steroid anti-inflammatories. One, because of a risk of a GI bleed, and two, it can really put stress on your kidneys. So people, a lot of physicians always say first start with Tylenol and then go from there, because we try to, people try to avoid non-steroid anti-inflammatories. It's headache. Some people have risks of GI bleeds. for ulcers. Tylenol is one of the biggest things. And I can tell you, after my shift of working 5 days in a row, Johnson and Johnson, I definitely took some Tylenol from those guys. And these guys as a company, I know their vaccine is probably number three compared to Pfizer and Moderna. But these guys have so many things to offer. Very well known dividend stock. Traditional Roth IRA material, I like the dividends in them. These guys are on my radar for sure. They have a dividend yield of 2.67% with a PE ratio of 23.75. Their over the counter products are just, I mean, they sell those like crazy at CVS and Walmart. And how many people buy Tylenol or use Tylenol? After a big day or a workout or something, they'll take Tylenol. I know sometimes I do after a leg day workout, which I probably will be doing with Johnson Johnson Tylenol after this video. I'm going to jump to the dividend history. These guys have a reputation of increasing their dividend, and they are that good. 2013, 66 cents, 70 cents, 75 cents, 80 cents, 84, 90, 95. They're sitting at $1.06 with a dividend yield of 2.68%, a PE ratio of 23.48. That's very attractive. Annualized dividend is $4.24. So you put your money in, park it, leave it, let the dividends do the work for you. Park your money, boom, money makes money. That's what it's all about when it comes to dividend investing. Just leave it alone. Again, like I said earlier in the video before we start everything, I don't like chaos, I like stability. These stocks increase their dividends and they're stable. They're stable companies. That's why people invest in them. That's why they're always mentioned in the market. Big stocks like this. There is a reason. Let's jump to the final dividend stock, and then we'll go over AOS. And again, Arbor Realty Trust, ABR, is a symbol. This is a mortgage-backed real estate investment trust. I did buy the dip on IVR today. I bought 34 shares, but these guys are still down. I mean, people are freaking out with the market. I own over 100 shares. It has an 8.24% dividend yield. The PE ratio 8.15. Its year range is 1348 to 2074. So it has beaten the S&P, which is crazy, is a mortgage-backed real estate investment trust. It makes them very attractive. So I bought them. And I showed you in previous videos, their revenue has been phenomenal, and it has increased every year, even during the pandemic. But I have to still show you the dividend trends to a lot of you guys that are new here, and then we'll go over AOS. 13 cents, 15, 16, 19, 21, 25, 27. Hit 36 cents. It has a dividend yield of 8.3%. Again, this is not financial advice for entertainment purposes only. Disclaimer in the description. I'll say that 1,000 times. But I like the consistent increases. I like the revenue. The dividend increases, what I was saying. And it's cheap. So this is why I absolutely love these guys as a mortgage-backed real estate investment trust. This is definitely the best mortgage-backed real estate investment trust out there. Probably one of the hottest REITs out there as well. So let's jump to AOS. So the symbol is, of course, AOS, and it's A&O Smith Corp. This is my bonus stock. This is one that you guys recommended. I will definitely post a video. I think I'm going to do this as a bonus stock at the end. And I'll have these little links where you can click certain stocks at certain times. But I encourage you guys to watch the whole video. But bonus stocks are always going to be included now, especially with your recommendations. These guys have a dividend yield of 1.38%, a PE ratio of 28.12, market cap 12.90 billion US dollars. Its year range is 5208 to 8360. Who the hell are these guys? Let's look them up. A.O. Smith is proud to be known as one of the world's leading providers in water heating and water treatment solutions. Right there, that appears to be a company in demand. As a leader, we refuse to sit quietly. Each and every day, A.O. Smith, we are working and developing state-of-the-art solutions that are pushing new boundaries, paving the way for our industry. Right there, I see things that are in demand. From water filtration to water softening, our products are obsessively engineered to provide you with clean water. So let me just say something with clean water. Clean water is important. It really is. And what happens if you have a knee buzz or, something, a breakout? You know, these companies are there to help people obviously live a cleaner life. And I'll go in a little bit into detail that, but the water heating is another thing. So no one comes close to matching our expertise, whether it's gas, electric, or tankless water heater. The inventive minds and A&O Smith have we covered. Gee, do we need water heaters? I think so. And more about them. They are consistently innovating to meeting customer needs. See how we are innovating today for tomorrow's technology. Look a little bit more into this water treatment. That is important. They have a faucet filter, a drinking water filter, reverse osmosis replacement kit, stage drinking filter replacement, and main faucet filter replacement. More information can be on anosmith.com/water treatment. So that is very interesting. So hopefully, don't quote me on this, but these can filter out bugs. So that's very important. So that's something that you would have to add. I can basically, if you're immunocompromised, kind of important, especially if bacteria or amoebas in there. I don't know if you ever heard of a cryptosporidium outbreak. I watched that Monsters Inside of Me, and well, the thing with amoebas are certain ones like cryptosporidium, bleach doesn't kill it. So what they did is they used UV filters and UV to disinfect the water in Milwaukee. This is like in the 80s, and people are really sick, especially immunocompromised people. So check out this site, and I'm going to give you a little bit of homework to look at these guys. But this is very important as a company, especially that they're in demand. I mean, I have city water here, and I mean, you can taste the chlorine. So, ugh, doesn't taste very good. My brother is, and my sister-in-law actually have these guys. They got this from Lowe's, and it's a very good product. They absolutely love it, and they live out in Addie, and they just praise this, loves it, love this. And I'm going to jump to its dividend history, and it also has another thing that's very interesting. But we have to also check out the revenue with these guys. Look at these trends: 2014, 2,356, 2005, 36, 2006, 85. In millions of US dollars: 2,996, 3,187, 2,292, 2,008, 95. It's not too bad. It's kind of stagnant. Not bad. But there's a few things that are really attractive about these guys. And right here, which makes them attractive, is they have pretty good stock split history. 1993, 2 for 1. 1998, 3 for 2. 2010, 3 for 2. 2013, 2 for 1. 2016, 2 for 1. Let's check out their dividend history. 2013, 12 cents, 15 cents, 19. You can see the stock split right here at 24. That makes perfect sense. 24 divided by 2 is 12. Then 12, 4 is 16, 18, 22, 24, 26, 28. So they do have a pretty good stock split history. They are increasing their dividends. The dividend yield is 1.41%, and the PE ratio is 28.29. Not a bad dividend stock. The dividend yield, I like the 3 to 5% range, but you are getting consistency. And I did say earlier in the video, we like consistency. We like stability in life. We don't like chaos. You're getting dividend increases, and you're getting a decent stock split history. So let me know what you think of this video. What do you think of AOS as a bonus stock? If you are new to this channel, make sure you subscribe and hit notification bell so you don't miss future videos. You better smash that like button. This is Dart Dividend. You guys have a good one, and I will post a video tomorrow.